Welcome to this very special edition of the KAJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through their industry insights, information, or simply learning from them. And today we have with us Kevin Guttman. He is a certified reverse mortgage professional and author, a trusted authority in the reverse mortgage industry dedicated to helping seniors unlock the financial freedom they deserve in retirement. We'll learn about the myths, and he breaks down those myths for us, clears confusion, and shares how seniors can turn equity into lasting security without selling or downsizing. Welcome to the show, Kevin.
Thank you, AJ. I'm glad to be here.
You are welcome. Welcome to the show, Kevin. Welcome to India in this online form. And I'm sure not just in India, but a lot of people across the globe will benefit from what we are. A lot of seniors across the globe will benefit from what we are going to talk right now. We'll talk about how one can retire smart with reverse mortgage. We'll talk about this. But before that, let's talk a bit about your journey, your background, your story, Kevin, so that the audience knows who they are listening to.
Yeah, I originally am from Southern California. I grew up right near Disneyland, of all places. And my dad was in real estate. He was a realtor, but he also was an investor. My mom was a nurse. And so my dad always taught me to buy a home as soon as you can, because real estate is a wealth builder. In fact, a recent study from the National Association of Realtors says that people who own real estate have a 40 times higher net worth than people who don't. And so I don't know the stats for other countries, but I would assume it's similar, that only real estate helps build wealth. When I first started my career, AJ, I worked for a nonprofit. I would raise money for people in the developing world, places like the Middle East and India and China and Indonesia and such, have clean water, medical clinics, schools, small business loans, etc. And it was very rewarding work. And I traveled a lot, met a lot of amazing people, and enjoyed that so much. But my wife and I have 5 children, and I was traveling too much, so I just needed to be home more. So I left that. My wife has a real estate background as well. We started flipping houses, buying, fixing, selling houses. Ultimately, 21 years ago, I got in the mortgage industry. And 10 years ago, I got retrained in reverse mortgages. And so I've been offering those to my clients for the last 10 years.
Absolutely. So who is this? What is, if some common person wants to understand about reverse mortgage? In India also, we have this reverse mortgage thing. It's been for quite some time. What's the state right now? I don't know. But I don't know how many people are using. But for a lot of people, that is why I'm asking, what should they understand? What is this reverse mortgage all about? And, nowhere in this whole mortgage, there's real estate written, but it concerns houses and all those things. That is what I understand. Help us understand for those people, anyone can understand in a simple language.
Yeah. So think about it this way, AJ. Somebody buys a house, usually with financing. They don't pay cash anymore. They have some financing. When you get older, 62 and up, now you've paid down your house quite a bit, or you may own it altogether. So you've got all this equity sitting there doing nothing. A senior homeowner can access that equity and not have a mortgage payment, but have more money to live on in their retirement years. And the number one fear that a senior has is not having enough money. So this just gives them enough money to live the life they've worked for and dreamed of, and not have to worry about money.
Absolutely. So if one has a house, they can use that house to get enough money, liquidity into their hands every month, and then later on they don't have to pay anything except for maybe real estate taxes and all. And beyond that, if something afterwards, the heirs of the property will have to pay whatever is due to this particular person.
Well, that's another unique point about a reverse mortgage, AJ, is these are called non-recourse loans. What that means is the only recourse the lender has is the sale or refinance of the home. In other words, no debt. The borrower is not responsible to repay it. The heirs aren't responsible to repay it. The estate is not responsible to repay it. The only way the lender gets their money back is when the last person moves out, the last borrower moves out, the house is sold or refinanced, the lender is paid back. So it's very unique. No payment required, and they technically don't owe the money. The money's only paid when the house is sold or refinanced, when the last borrower moves out. Those are the two unique features of a reverse mortgage.
Absolutely. So how does it work? What is the intention of the industry? What is their business model here, Kevin? Because a lot of people will think, there might be something hidden, what these guys are not telling us. And there are some myths also that keep, floating about such things. What would you like to tell those people about whatever these are?
So a reverse mortgage is the safest loan that a senior homeowner can ever get. There's so many safeguards and protections for seniors because, AJ, seniors get scammed on all the time. And so this is a highly protected class, if you will, of people that the government wants to be sure they're not taken advantage of. Who it helps is somebody that wants more money to live on each month, wants to maybe start giving away their estate while they're alive to their favorite charity or their kids or grandkids or whatever the cause they believe in. Someone that maybe needs to move and can't afford to move so they can finance their next house with a reverse mortgage and have more purchasing power, 35 to 45% on average, depending upon their age. Or somebody that, maybe if we could free up them not paying a monthly mortgage payment, that would make the difference in their budget to where they don't have to stress every month about making their bills. So that's three ways people use it: access equity, finance a home, or eliminate monthly payment. The catch is, if you will, it's a deferred interest loan. So let's say somebody takes out $100,000 balance, and that money is going to grow month over month because they're not making a payment. So at the end, they owe more than they took out because interest has been accruing. But I will say this, because somebody's borrowing so little, 35 to 45% on average in 2025, there almost always is money left at the end for the heirs. They're not eating up all the equity, but that is one of the downsides. There is less equity at the end for the heirs.
Right. So what happens to, say, suppose this person, the senior person, lives a good life, and then he is not no more. Afterwards, how does this work? And I want to understand, where does the lender, how do they profit? Obviously, they are into this as a business, and they must be making profit, maybe windfall profit, which they don't explain or which we should understand, because you said it's deferred interest, and they will make that. So how does what are the numbers here? What is the business model here? How much money do the heirs have to pay? Because obviously, if it's their property and some money has already been taken, then they will somebody may want to have that property. Otherwise, the senior could have sold that property, but then they would have to move to another location with all that money that will be. So help us understand from those points of view, Kevin.
Yeah. So what we've seen with recent studies is 91% of people want to stay in their home. They don't want to move. So what this does is this allows a senior to remain in their home, retain ownership on title, maintain their independence, gain access to their equity, and then refrain from having a monthly mortgage payment. And then when they're ready to move, when they've moved out permanently, they've died or they don't live there any longer, the loan becomes due. The heirs don't owe a thing. Only the sale or refinance of the house is how the loan is repaid. How the lenders make money, AJ, is these loans are insured. Most of them are backed by the FHA, Federal Housing Authority. And so they're guaranteed to get their money because they're insured. So it's a very safe risk for the lender because they know they're going to get all their money back. Even if in the rare case, it's highly unlikely, but let's say the property ends up underwater. In other words, they owe more than the house is worth. Could that happen? It's unlikely, but in a perfect storm, yes, several things would have to happen over a long period of time for that to happen, but potentially it could happen. Now, that's where the mortgage insurance kicks in. These loans have mortgage insurance. So let's say the house is worth 150 or 250, we'll say, and they owe 275. The mortgage insurance makes up that $25,000 difference. Not the heirs, not the borrowers, not the estate. That mortgage insurance makes up that shortfall. And the heirs walk away, in this case, with nothing, but also the borrower and the heirs aren't on the hook for the overage that is owed to the lender. So I always say it's not a silver bullet. It doesn't solve every problem, but it does solve a lot of issues that are important to seniors. Number one, they're concerned about outliving their money. So this just helps them to have more money in their retirement years and not have to stress and worry about having enough money. Can I share a quick story real fast about the very first person I helped? So this, my client referred her mom to me. She's 84 years old, and she's just a ton of fun, 5 foot nothing, and just full of fire and lively gal. And I asked her, I said, Carmen, why do you want to do this? And she says, well, to be honest, my budget's tight. I said, okay, I understand that. A lot of people have that issue. She lived in a duplex. She lived in one side, rented out the other side. The rent paid for the mortgage, and then she had Social Security to live on. You'd be surprised at how many people are just living on Social Security. But most people qualify with just Social Security income anyway for the loan. Long story short, I said, well, tell me more about that. She said, well, I'm actually using my credit cards to buy groceries. So here we are at the closing table now, and I'm doing the math. So no more mortgage payment, no more credit card payments. It added up to just under $1,100 a month that she was saving. So I know the math. I said, hey, Carmen, how's this going to change your life? And she looks at me and she kisses me on the cheek. And she says, now I can sleep at night. I don't have to worry about money. And that is in a nutshell what it does for people, AJ. It just gives them peace of mind where they don't have to worry and stress and count pennies and wonder if they have enough money to pay for their medical expenses or their medicine, prescriptions, or buy groceries or go out to eat or whatever it would be, pay their utility bill. They have enough money to live and not worry about their bills.
Absolutely. Absolutely. Who is this for? Is it for everyone? How much money do the lenders pay? What percentage? Is it around 30%, 40%, 50%? Is there a particular cutoff here, Kevin?
Yeah, how much somebody can borrow is based on three factors: their age, the interest rate, and the value of their home. So on average, it can be as low as 32, 33%, and as high as 55, 57%. The older they are, the more money they can access. So it's kind of like a fingerprint in a way, because what they do with it, there's no restriction on what they can do with the money, except the government doesn't want them to purchase an annuity, because in effect, they're already annuitizing or unlocking or accessing their equity. That's the only restriction. But they can do anything else they want. They can buy another home. They can buy a business. They can help their child or grandchild with the down payment on a house. They can take a trip. They can buy a car. They can pay off debt. They can do anything they want virtually except purchase an annuity. So I would say on average, most people, about 35 to 45% is the range that they can borrow.
Right, Kevin. How much is the adoption rate? You are a veteran professional in this line. How many people actually go for this particular thing, Kevin?
You'd be surprised. It's growing, but it's only about 2% of the market because they have a terrible reputation. The reason they have a terrible reputation is the very first reverse mortgage was taken out in 1961. A widow could no longer afford to stay in her home. She knew the local banker because her husband was a football coach. Banker played football for her husband, the football coach. And they went to the bank and said, look, what if this woman suspends her mortgage payments and we take interest each month from her equity? That would allow her to stay in her home and not have a mortgage payment. So the very first reverse mortgage was born in 1961 in Maine. However, for 27 years, these loans were not regulated. So it was kind of like the Wild West. Different companies had a version of a reverse mortgage. And frankly, some people got taken advantage of. Some people lost their homes because it wasn't regulated. 1988, President Reagan and Congress came together and passed the Home Equity Conversion Mortgage Bill, HECM. They made it a 10-year trial bill, and they wanted to see if it would help a senior stay in their home, retain title, remain independent, gain access to their equity, have enough money to live on, etc. 10 years later, they made the bill permanent. And over the years, they've improved it and made it safer and more beneficial to seniors. So now we have over 1.2 million people who've taken out a reverse mortgage. And the tide is starting to turn where people are seeing maybe this isn't as bad as I thought, because they're going off of 1961 to 1987 or 88 when people were taken advantage of. That hasn't been the case since 1988 because consumers have been protected. But, you know, the government's terrible about promoting their programs and getting the word out about how it works. And so guys like me have to educate people. And I think also people in general are skeptical. You know, oftentimes this sounds too good to be true. People want to know what's the catch. Well, the catch is it's a deferred interest loan. There's going to be less equity at the end. The catch is it's expensive. We talked about that mortgage insurance. So these loans have normal fees that any loan would have, but then they also have the 2% mortgage insurance premium. So on a $100,000 house, that's $2,000. On a $500,000 house, that's $10,000. So that makes the loan expensive. But that's also what makes it a non-recourse loan that the borrower, nor the heirs, nor the estate doesn't have to repay.
Absolutely. So what happens? Suppose, the borrower dies, say, after 10 years and whatever money they have got. So whose job is to make sure that the house gets sold? Is it the heirs, or is it the lender who will do it, or is it, and if there is any other loan already existing from the, mortgage already from a particular bank or any institution, what happens there?
Yeah, so the heirs or the estate will have up to 6 months to sell or refinance the home. They refinance it, they can move into it, or they can rent it out. So it's up to the heirs. There's no payment due during those 6 months. As long as they're actively trying to sell or refinance the house, they can ask the mortgage servicing company for an extension. They can be granted 2-3 months extension. So in effect, they could have as long as a year to sell or refinance the house if they needed it.
Absolutely. There's much to learn about all this, and I'm sure your book answers a lot of these questions. Tell us a bit about your book, A Reverse Mortgage Changed My Life, real life stories of hope, courage, and inspiration.
Yeah, so I just wanted to write a book about my clients' stories, how it's helped them. And the way I got the title was I brought some of them into the radio studio to record some ads. And I asked them, I said, hey, well, just tell me how a reverse mortgage has helped you. And several of them kept saying, a reverse mortgage changed my life. A reverse mortgage changed my life. So I had this idea from a few years ago to write this book. I just started collecting their stories because, you get to know people as you're helping them. And I said, hey, would you be willing to be interviewed for my book? And several of them were. I think it was about 30 of them. And so these are just their stories of how reverse mortgages have helped them either finance a home, eliminate a monthly payment, access their equity, or if they had a reverse mortgage, refinance their current reverse mortgage. And so we just share their stories with the idea of trying to help other people, encourage other people how it might help them.
Absolutely. As I said, there's so much to learn about all this from you, and I'm sure a lot of people, a lot of seniors would like to connect with you, learn more from you, about how this all works on the ground. What's the best way for them to do so, Kevin?
So they can call me if they want. I have a toll-free number, 877-251-9709. If they want to just explore and learn more about it, I have a lot of great resources on my website, reversemortgagerevolution.com, reversemortgagerevolution.com. There's FAQs on there. There's videos. There's interviews. There's podcasts. There's a consumer guide they can download. So lots of great resources and tools on the website.
Wonderful. With this, it's a wrap on this very special edition of the KAJ Masterclass Live. Thank you so much indeed for joining us.